Sanjay Dutt, good morning. You've been sticking your neck out, and literally this time on television channels, and you've been making a case that enough is enough. I will put my money into small and mid-cap stocks. Now, there is logic to, there is reasoning, Sanjay, that mid and small cap stocks are cheap. They are trading at a discount. They've been battered down, not because of news or economy, but because of technicals and FI selling and fund selling. But the problem, Sanjay, is that right now there seems to be no appetite to buy these stocks. There are no flows. There is no desire by HNI investors to revisit mid and small cap stocks. So what does one do? There is value, but the value could remain deep value for a long, long time.
You're absolutely correct, Nikunj, but the fact remains that at this point of time, quality is crowded. Quality is risky, in my opinion, because everyone's basically into those 10 or 15 stocks. You know, just an indicator, Kotak Bank had a market cap of 3.3 lakh crores. And on the other side, if you put together, banks like Bank of Baroda, PNB, Canara, Union, Corporation Bank, they don't even come to half that market cap. Whereas if you see their deposit book and the liability side as well as the asset side, it will be multiple times of Kotak Bank. Now you're going to tell me that those banks are going to shut down and Kotak is the only bank that will survive, or HDFC is the only bank that will survive. See, this is a time when you need to take those courageous calls. Now, I don't know if tomorrow, I don't know if 4 weeks later, whether those, some good quality stocks in B group would turn. No one knows. It's like what we were experiencing last year in January 2018, December 2017, when no one was looking at the large caps and the mid caps was an extremely crowded trade, and then everything collapsed. So this is the time that I think you got to stick your neck out. But I obviously can't game whether this is going to happen in the next 2 weeks, 4 weeks, 6 weeks. I'm not that kind of investor. I'm looking at something 2, 3, 5 years later where I'm going to make money. I feel this is a good time to start building a portfolio. Be courageous.
Sanjay, a purist would say, look, I will go where value is. But if I have to draw a parallel here, purely out of market experience and what I've observed, when stocks go into a bear market, it takes a time before they revive. A classic case here is that mid-cap stocks, when they corrected last time, it was in 2008, 2009, it took them 5 years to come out from that hole. So if I assume that 2018 was the peak of correction, it's just been 2 years. So they may just linger around there, they may just hang in there for another 2 years. And the problem what happens, Sanjay, is that while you are moving towards mid and small cap stocks, the large cap stocks are giving you such great returns that you get this uneasy feeling of feeling left out.
See, that's exactly what you're going to live with. But I disagree with you that, large caps are making substantial gains. Barring 15 or 20 stocks, if you take them out of the Nifty, you would be seeing Nifty at the levels of about 9,000. So it's wrong to say that, large caps are making huge money. I can tell you so many large caps, whether it's the L&T or the ITCs of the business, which haven't made any money in the last 2 years probably, or have made nominal returns. So the fact is, and also understand, I'm not saying that go and buy a mid-cap index fund or go and buy the entire basket. Within mid-caps, I can easily make a list of 100, 150 companies, good quality, low leverage, substantially prominent and large in their own markets and their own businesses. But at this point of time, no one wants to look at them. So I think that's where the opportunity lies. Now, those are the stocks which are not going to remain in a 5-year bear market. Yes, as a basket, mid or small caps may remain, as what you correctly said, no one knows. And in any case, we can't go back and always lean on history, because what is happening right now, I don't think any one of us in our living history who've been in the markets has seen these kind of developments and these kind of carnage in the financial markets and in the main street, in the main system. Clean up on NPAs, IBC, GST rollouts, and what pain we all are going through. This is a transformation period. So we cannot in any way go back on history and actually, project forward as to what will happen. I think times have changed dramatically, and we have to realize that we have to adjust to these new realities that are coming in front of us as investors, as corporate business managers, as promoters.
Okay. So Sanjay, I'm going to talk really long term today. Just one of those days I'm trying to, remind our viewers that Look, if you bought into stocks 10 years ago and ignored all the global cues, what Fed did, what is happening to inflation, which way the Tata and the Mistry feud has gone, ignored simple data points in the world, and just kept the faith, you've made money. You're a long-term investor, Sanjay. Give me some themes or ideas where you say, look, I'm going to buy them now, and I will stick to them for next 3, if not 3, 5, if not 5, 7 years. And market volatility, global tweets, what is happening in politics, that will not affect me. I'm going to buy these 1, 2, 3 stocks, buy them, and forget about them. What are your high conviction long-term bets?
See, Nikunj, I'm absolutely clear. There are certain timeless companies, there are certain timeless brands in the country which are not going to shut down, which are going to survive cycles. And I'm going to bet on these. One which I've very openly bet on, and I think everyone in the market knows, which I think has a tremendous amount of potential, is the largest stainless steel player in the country. The Jindal Group, for instance. Jindal Stainless and Jindal Stainless Hisar, both the companies are more or less the same. If you look at the combined enterprise value of both the companies, they would not even total up to $2 billion. And between them, they control a 50 or 60% of the stainless steel industry in the country. Now, stainless steel is something that's being used in railways, defense, production, in construction, everywhere else. So what you're trying to tell me is that the entire 50% or 60% of the Indian organized stainless steel market is just worth $2 billion, and I can buy a player in $2 billion or $2.5 billion into value? No way. So something 3-5 years down the line is going to definitely change for this company. Similarly, look at a company like Dabur. Timeless brands. I don't own Dabur, but I'm giving you just another example. It's not performed for the last year or so. I look at companies like, even in the public sector, I mentioned a few days back on another channel, a company like Power Grid. It controls 1.7 lakh kilometers of power lines across the country. So whether you're solar, thermal, nuclear, or anything, you need to roll power across the country on transmission lines, on transmission networks. The entire enterprise value of the company would just be about $4 billion. Now you're telling me the largest power consumer in the country over the next few years, which is going to be India, you can have own the entire grid in about $4 or $5 billion? No way. This is going to change. Okay, we may say PSU, nothing will happen. We've sat in the HPCLs and BPCLs for 10 years, and what did we make money? But it's very difficult to gauge as to when these things are going to turn. And similarly, I can go down and find so many other ideas. Power Grid is one that I own. Exide Industries is another one which I own a very small position. Look at that company there. It's gone into EV batteries. You could tell me that the country won't need batteries. You don't need, and if you need batteries, the first brand that comes to your mind, whether it's an OEM or its replacement market, is Exide. So, and I think that company is available at this point of time, something like a $2 or $3 billion enterprise value. So therefore, and these are quality names. These are not those, questionable, names that we may think of promoters, and these are not highly leveraged companies. These are very manageable leverage, or in fact zero leverage in these companies. Marquee management, marquee brands, promoters, absolutely time tested. Similarly, I can go on with many ideas like these, but you need to have patience to invest in them. They're not going to give you returns in 4 weeks, 4 months, or 12 months even. If you have the patience to write them out, if you have the patience to see another 10 or 20% down in them and then make that 50% gain, that's where you got to be.
Talking about long-term bets, Sanjay, what do you make of your experience with the ADA companies? Where do you feel perhaps, would you call that a misjudgment? Would you call that a learning? What would you take away from that experience?
Oh, phenomenal learning. I've lost a lot of money. I've lost more than amount I could ever think of in life in those companies. But that's exactly where we learn. We got to come back and understand, like I said, during our lifetime in the last 3 or 4 decades in the markets, none of us have experienced such times. None of us ever thought groups like ADA, groups like Z, groups like, SR would go through what they're going through. But we must understand, these are times which are going to totally change the face of our Indian business and Indian markets. we all ourselves are opening our eyes as to what we need to do before we need to invest. Whoever ever took into account while doing his analysis as a fundamental or any other form of analysis that you have to look at promoters and on top of that the grandfathering pledge of companies. So even if the company is not leveraged, the promoter's extra leverage, like unfortunately what happened with Z, and I respect that promoter for honoring his commitment, no one thought this would happen to my investment because Z itself was such a phenomenal company. So, phenomenal learning that we've all gone through and pain that we've gone through in the last 2 years, I'm sure these lessons are going to remain for a long time. And of course, quite a few will be wiped out. Quite a few will start rebuilding our lives like we all are trying to do now.
And hopefully for the new year, there's going to be some mistakes learned and, things being done a tad differently. But, Sanjay, we've seen the obsession as well with low debt, but that's an ideal scenario and one can't really work with that. So what is your outlook on some of these kind of companies?
See, my question is that one shouldn't have an obsession with low debt. One really need to go and look at a consolidated position of a group. Where is the promoter stretch? One lesson we've all learned that if promoter has 4 or 5 companies, and even if one company is in trouble, you're sure that the other companies are going to have pain also. So therefore, we need to do much deeper analysis wherever we are doing anything. So I would say that it's a very important lesson that's being learned for corporate India as well as for investors like us who got lost in those go-go momentum days and everything was good and growth of 6%, 7% taken for granted. So we got to all look at optimum debt, we got to look at enterprise value, we got to look at coverage ratios, interest, debt service. I think this kind of learning has been an eye-opener for all of us. Most of us have been in the market from the late 80s and 90s and we never saw what we've seen. So debt is not a bad 4-letter word. Manageable debt and trying to understand the implications of debt and what stress case situations can companies and cash flows handle is what has taught us in this crisis.
Sanjay, so when do you think this tipping point would come where markets would say, look, Asian Paints is a great company, DMart is a great franchise, Bajaj Finance is a great company, but you need debt to grow. You cannot have a situation where only startups and no debt, only brand companies will fuel the economic growth. When do you think markets will say enough is enough? I will go for good companies with reasonable debt and well-managed businesses.
Nikunj, I'm already seeing this trend because if you just look closely last 3 to 4 weeks, some of the savvy investors have started looking at ideas that have started. If you look at the recent research reports also that are coming out from very savvy, I wouldn't say large or small or but savvy broking houses, they already started differentiating. So I think the time is now to start picking up. Now, whether you're going to have to hold those good quality stocks which manageable leverage, whether you're going to hold them for the next 2-3 months before they start to stop losses and start going up, it's very difficult to game. But I'm reasonably sure that we are at the end of this whole cycle of correction. Yes, there may be a little more pain left in a few companies, few more pockets, but I think most of it has corrected now. So, and companies are starting to look at borrowing money, are starting to negotiate good rates. And if you go and ask good quality companies, they are able to get money from banks at much lower rates. Yes, pockets like NBFCs, etc., are still facing a problem. Government still needs to address some issues there. But I think government behind the scenes is doing a lot of work. Companies are also starting to now look ahead and have cleaned up substantially. And I think the time is now where you could really make out from some savvy research reports as to what is going on, some savvy fund managers, what they're doing at this point of time. And I think a case in point was the ICICI Bank move of the last 4-5 weeks. It was led by a few savvy fund managers who realized that that was the place to be. So you will find similar examples across the market, a lot of pockets like that.
Sanjay, where do you think a large compounding story for this decade is going to be? This decade, when I say, after next 10 days, where do you think could be the classic compounding story for the next decade lies ahead of us. It is still private banks, or it could be insurance, or it could be something else.
See, of course, spaces like insurance are going to be evergreen in India for the next many years. Insurance and asset management companies, whenever you get negative periods, they are to be added to portfolio as steady, stable bets that should be there in your portfolio. But I think the compounding 2x, 3x, 4x bets are there in a lot of good quality, second tier names, good managements who've learned their lessons, but are still not being re-rated by the market because everyone's crowding into quality. Then I think one play which I'm willing to take a risk on and bet on at this time, which I think in the next 5 years is going to be a big play, is going to be PSUs, strategic PSUs, because beginning with BPCL, there's going to be a lot of PSU action in the last 4 to 5 years. And I'm convinced, because I've seen what the government is now looking at. Government has no option, and plus government is very clear on this, that they need to get out of most of the companies where there is no strategic sense, there is no need for a government company to be there present in, whether it's a consumer force focusing or etc. So I think PSU is one place where you can safely bet for some 2x to 5x ideas over the next few years, next 5 or 8 years. There's going to be a lot of big stuff there, whether it's going to be restructuring, management changes, governance issues, strategic divestments. A lot of focus are going to come in there. No PSU is going to get money being poured into it just for nothing. They all started becoming accountable. And I feel exactly the same for the top 5 public sector banks. They're all now beefing up. If you go and ask anyone in the market, particularly the ones who are through consumer-focused businesses like automobiles, etc., see how aggressive banks like State Bank of India and a lot of other banks have become in even auto financing, etc. So I think that's another play. If you are going to bet on the economy, you need to bet on a few 4 or 5 PSU banks which will actually make you money. And it's not just the private banks which will keep gaining market share. So I think a lot of work needs to be done. These are just 1 or 2 themes that I've been looking at. I may be wrong, so therefore we need to discipline and learn from our stop loss levels. But I think these can play out, are worth a risk reward right now.
What's the stance, Sanjay, when it comes to auto? Lots of sound bites coming in from the likes of R.C. Bhargav, Anand Mahindra, saying that we will see green shoots of recovery while there's not going to be any, a big bang turnaround. Do you think that there is select opportunity within the auto space?
I'm a little confused there, because I think auto's got its major structural issues that we are dealing with. So whether it's got to do with, shift to EVs, whether it's got to do with the shared commute concept, or whether it's got to do with public transportation in metros, metro lines starting to work in cities. So that's one place I still don't have a call. It's going to be very difficult to actually spot the next winner. And I don't find anything that's dirt cheap that I can go and buy and take a risk on it. They're all well owned, or maybe over-owned to quite an extent, and are not cheap. So that's something I would be underweight on. I would probably have a Maruti in my portfolio, which I don't have right now, but if I have to at the right price, or maybe an M&M, there also I'm a little worried about the business model. So auto is one place where I'm a little confused right now, so therefore I'm confused and I'm doing a lot of work on it right now. I really won't take a call right now. But some key auto ancillaries, whether it's EV or whether it's otherwise, which will still be needed, is like one example that I gave, an Exide. Those plays can be looked at. So irrespective of what the trends pan out, these companies would be beneficiaries.
Really appreciate your time. And if you don't get a chance to meet in this year or this decade, sounds like a long time. But wish you season's greetings and Happy New Year well in advance.
Thank you so much. Thank you. It's lovely to be with you all always. And wish you all the best, Niti, now for the superb work you've been doing. I think the next decade is going to be really a good decade for all of us.
Well, thank you very much.